Hi, I'm Steve. I'm going to share my thoughts on how you can achieve a better financial future. Please remember, I don't know anything about your situation, so think for yourself and use what fits. Welcome back to the final part of our conversation about investing basics. We're talking about how stock returns can be a lot more volatile and be a lot bumpier ride than bonds, but they pay better. Let's take a look at the historic averages. In the US, the average per year increase in value for the S&P 500 was 9.1% over the last 100 years. For bonds, it was 1.6%. No one knows what's next, but things tend to become more average over long periods of time. To help visualize the impact this has, here's a 40-year investment comparison using those numbers. You can see over time, the S&P 500 dramatically outperforms bonds. For the first 5 years, say, the lines are pretty close together. There's not a whole lot of difference. But by the time you get out to year 40, the S&P 500 has turned a $1,000 investment into something worth over $30,000. On the other hand, for bonds, you probably just keep up with inflation. $1,000 turns into maybe $3,000. So the takeaway here is if you're investing for a retirement that's 40 years away, invest in the stock market and benefit from the better returns. Just be prepared to hang on when the market bounces around, and it will. Like mountain biking or bull riding, just hang on. Take note of that last point. Most individual investors do worse than the market as a whole. Why is that? Because they panic and sell low when the market drops, and then they get happy when the market is strong and buy high. Just tune out the noise and don't try to time the market. Buy when you have money to invest and sell when you need the money. Now, if you're going to need the money soon, say for next year's tuition, be a lender. The value of your investment won't bounce around as much, and you'll be more likely to have the money when you need it. That's it for Basics Round 1. This is stuff you can do and create a better long-term future for yourself. Thanks for watching, and I'll see you next time.